Thank you. Thanks very much, and thanks for the opportunity to come and talk to you today. Always amazes me that people will want to turn up and hear what I might have to say. So, thank you. I'm going to sort of go a bit all over the place with a few different topics today. Hopefully, it stimulates a few questions. Not afraid to jump into questions either as I'm talking or at the end. And it's great to just had a bit of beef rib. There's nothing better than beef for lunch. And there's nothing better than New South Wales beating Queensland last on the weekend. Having been brought up in New South Wales, it was great to walk into the office on Monday morning and give it to the Queenslanders. But without further ado, I'll talk about CPC. So if we look at CPC today, we've got 9 cattle stations left that we actually own. We're still operating about 5 of them that we've sold as part of our sale. I'm not going to try and do death by PowerPoint and run you through stuff, but it wouldn't be an ag industry presentation if there wasn't a heap of macro charts. But just to give you a bit of a background on CPC, we currently own about 300,000 head worth of cattle capacity. It's down a little bit from the drought. 3.5 million hectares of land, vertically integrated into Indonesia with a couple of feedlots. And still sort of producing about 25 million kilos of beef a year, and looking at a few other projects. Most of our portfolio is in the high rainfall zone, so over 542 mils, which is the Australian average. We've only got one property that sits outside of that, which is Isis Downs. So we're owned by Terra Firma, which is a UK private equity fund. Terra Firma go to the market. They raise money in investment funds. They raised our fund in 2007-8, and then they went and bought businesses all over the world that were in pretty asset-heavy essential services. So renewable energy, healthcare, food, entertainment, and CPC. So people would say, why would a UK investment fund buy into a company like CPC? And I'll run through a few of the reasons why they bought in. It hasn't been perfect sailing. They had a few challenges the first couple of years. There was drought, there was some market disruptions, but overall it's been a pretty good investment and part of a balanced portfolio. Jump in. So why did Terra Firma pick CPC? I suppose they're sitting there in 2008-9, having raised a bunch of money. They're looking for where are disruptions in the world. So one of the disruptions that they really got onto was food disruption, that more food will be required in the next 30 years and that was consumed in the last 500 years. So looking for big disruptions. Private equity-like disruptions, either that they cause or someone else is going to cause that they can be a part of. So food disruption was a big part of it. They wanted exposure to this circle, and you would have seen this 100 times, I'm sure, that there's more people living inside this circle than outside of it. But they didn't want to put a heap of capital into China. They didn't want to put a heap of money into Asia, but they wanted exposure to Asia. So Australia was seen as a pretty safe haven that's got a lot of Asia exposure. So that was another reason. They'd invested in North America, in Europe, in the UK, and Australia was their first Southern Hemisphere and farming investment. But the fund didn't really want to have a huge exposure in Asia. The other thing that they really wanted to get exposure to was the world population growth and the decline in arable land and livestock land, looking at saying, land prices are just going to have to go up. Looking at the chart, they're just saying, there's a crossover point. There's plenty of these charts for water and all sorts of things, but they're looking at consumer demand, meat production challenge, and also land value, and looking at. So we were quite a defensive asset in terms of portfolio balance. So land heavy, and if you look at some of the other businesses, they were in retail, they were in consumer products, they were in healthcare, and we were part of balancing the portfolio up with a pretty land heavy base. The other thing that they sort of jumped on in the period was that the consumption of beef was going up whilst the cattle herd was going down. There's a few things to put this chart in perspective. Is carcass weights are going up, cattle are being turned off faster. America just keeps making cattle bigger and bigger. Every year we think they've hit maximum carcass weight and they just make them bigger. And I don't know if anyone's been to the US recently and ordered a sirloin steak. or a ribeye steak, and it's square on one side because they've cut it in half. The ribeyes have got so big now that to get a decent cook on them and not to crisp them through, some of the big cuts of steak are actually getting cut in half because they've just driven the carcass so big. And so, but looking back at this, terra firma wanted to get exposure to this macro. The other thing that they were looking at, and this is a bit of an older chart, but the challenge that China was placing in Southeast Asia. I used to do a reasonable amount of business in Malaysia years ago, sending cattle and meat up there, and it was really difficult because all these cheap cattle and cheap meat used to come down out of Thailand. It now gets sucked up into China, so this is local cattle flow, not Australian cattle flow, and they really want to be exposed to this as well. So what are the, I suppose that's sort of why did terra firma buy in? I'll come up to the sale a bit later, but the fund that we're in has to sell all the assets. So they basically raise money, hold it for 10 or 12 years, and then sell all the businesses. So the businesses in our fund, UK businesses and North American and European businesses are all in various stages of sale at the moment. So I'll do a bit of a talk on a few challenges and opportunities in the beef industry. Certainly this year the drought has been pretty substantial across Northern Australia and Southern Australia, to say the least. The Northern Territory has had some of its lowest on record rainfall, and parts of Queensland have had their highest on record rainfall. But it's interesting to look in the Gulf, where the bulk of the cattle drowned earlier this year, that they had their record lowest rainfall in that little red dot. So the rainfall, of course, and the challenge actually didn't fall where the damage was done for a lot of people, and that was quite challenging for a lot of people. We got hit by flood on one of the properties that we had, and we lost 1,240 cattle, which was really sad. But the team did a really good job of being pretty proactive when a cyclone was called. We had warning systems in terms of how we thought about black soil, not a lot of ground cover, cattle that they weren't weak, but they weren't well covered in body condition, and we moved a lot of cattle onto our red country, higher country, put out hay and moved some cattle, and we still lost 1,240 cattle, unfortunately. But our team did a really good job. Not saying that other people didn't, but it's you've got to certainly be aware when you're producing in Northern Australia. You really need to be on top of where will rainfall come, where will water come from, and how fast will it come in, and what will the temperature change and drop do, because in northern production systems, when you're dealing with properties that are over 100,000 hectares and have lake, one of our properties over 100,000 hectares has got a million hectares, sorry, has a 140,000 hectare lake. It can fill in about 10 days. Half of it could fill in about 2 days. When you've got low pressure systems, cloud close to the ground and a lot of wind, it's really hard to put a helicopter in the ground, up in the air, and black soil isn't very good for driving and walking on. So you've got to be pretty proactive. So Newcastle Ward is one of our properties on the Barkly has received 20% of its annual rainfall this year, and there's a picture of it on the right hand side there, and I'll show you a bit more. So this is what the Barkly tablelands looks like across much of Northern Australia at the moment. There's reports of 600,000 or 700,000 cattle being trucked off there at the moment. I think that'd be pretty accurate. And it's bloody tough going. It's really hard, not just for livestock, but for people as well. We've got to be really proactive, but we've also got to focus on the mental health of people. Having your team members out there every day looking at that sort of stuff can really get them down. And then the other thing that we're fighting this challenge with is all the wildlife that used to live out there have all decided to relocate to the homesteads as well. So the amount of cockatoos, kangaroos, corellas, crows, everything is coming into the homestead, and you go to these northern homesteads at the moment, there's, without exaggeration, you see more cockatoos than you see in your life, and they're just chewing everything to pieces, breaking everything, ripping all the trees apart and things. So, but on the same property, in the same paddock, this is what it looks like from the air, where the lake has dried out. So the verbine, which is like a native lucerne, is grown up through. So this has created an opportunity for us for about 25,000 head of cattle that are doing about 0.8 of a kilo a day out in the lake, where this verbine that's about knee high is growing. We've taken about 5,000 tonnes of hay off there. and we've had some good success from there. So in Northern Australia, the challenges and opportunities around drought are substantial. We've got a couple of floodplains that we use near Darwin with Indigenous owners, and as all the flood water runs off, you get all this sort of delta of green grass coming up. So I often get asked about our 2 feedlots in Indonesia, and I thought I'd show you a really quick video of what they look like. So Juanjaya Abdul Andim is our Indonesian feedlot, or two of them we have. That's the company name. We do a fair bit of farming there as well, and it's a really important part of our business, not just economically, but socially. It's really important. So I'll give you a quick drone flyover of the business. So this is just driving up the driveway into the property, with some of our farming country on the right-hand side, and then a little truck stop on the left-hand side that's developed. So we don't own this little red roof building, and the lady there's set up a truck stop and feeds all the truck drivers. Just flying over on the right-hand side, a breeding centre, and now coming to the security gate. So all of our suppliers absolutely sweat their trucking assets and get the most out of their trucks. So we do a little bit of horticulture as well. Most of the feed comes in bagged. We feed green chop every day, so we're chopping corn every day. It's quite mechanical feeding. We do our farming by hand, but we do all the feeding operations with technology and modern feeding. All the cattle are shedded. These are a couple of cattle sheds here. The cattle are fed for about 70 to 120 days, and then sold into the market. Animal welfare and animal performance is certainly, for us, goes hand in hand, as well as our role in the community. We produce about 50,000 tonnes of manure a year, and we sell that to local farmers and also give it to local communities. And we're looking at some insect protein opportunities at the moment. This is our farming land here. We get it on a good normal year. We'll get 4 corn crops a year cut for green chop out of that country. We do grow a few coconuts, which is a bit of a legacy issue. Most people wouldn't associate CPC growing 80 to 100,000 coconuts a year. We have a local herd of Balinese cattle, and that's really important. The 20 local cattle are really important to local government. Everything's electronically traced and automated. Every animal is photographed, and this is on induction, and all their data is recorded, and then we use that performance information for managing supply and performance going forward. So that gives you a bit of visual overlay of the feedlots in Indonesia. One of the questions I often get asked is what's been the impact of Indian buffalo in Indonesia? Those who don't know, Indonesia is a country that is free of foot and mouth disease, and constitutionally wasn't allowed to bring in meat from a country that had foot and mouth disease at all. And the government made a decision to effectively break the law. We don't rub that in at all, and bring in Indian buffalo. They actually mandate that every supermarket sells Indian buffalo. So it's discounted here down to $4 a kilogram, and in the same shop, there's Aussie beef selling anywhere from $60 to $80 a kilo. $40 to $80 a kilogram beef, and the Indian buffalo just not selling. It's certainly having an impact. It's coming into the market, but it's displacing chicken. The chicken price has really fallen. It's displacing some of the soy proteins, and it's more moving into manufacturing. We're also seeing that the Indonesian population, their beef consumption is growing from about 2 kilos a year up to 3 kilos a year, and a lot of that growth is being filled by Indian buffalo to people that were lower income and couldn't afford beef. So it hasn't been the sort of doomsday at all that we thought it would be. The biggest challenge for us has been the cost and the expense of the Australian cattle. With the declining Australian cattle herd and the demand for Australian cattle, the biggest challenge for us has been the cost of the Australian cattle at times. So in the market in Indonesia, we sell just about all of our cattle to butchers. They buy the cattle at the back of the feedlot. We have full traceability and control through about 30 abattoirs. We have 20 animal welfare officers that are mainly students. They work at night going to the abattoirs. They're on a motorbike with a mobile phone that's got a Bluetooth reader through it, and they'll scan the animal as it's being processed. They'll make sure the animal welfare is being done. and they'll feed that information live back into the database. But what that gives us is live customer connection. We get to see the offal, we get to see bruising, we get to see carcass performance, we get to see the cattle are fat or over fat, and that connection to customer is certainly has more than paid for the cost of by the animal welfare officers. Big thing here is we spend a lot of time as an industry talking about premium products and branded products, and I'm a big believer in branded products and branded Australia and sell brand Australia. But if you look at a country like Indonesia, there's a bit of growth in mini marts, which is like 7-Elevens, Indo marts, but there's been no real change in wet markets. And if anything, the government's pushing more and more to wet markets. The cost of sort of wet markets and farmer markets is quite cheap. The consumer trusts the person they're dealing with, they have a family connection, and we're really not seeing much of a decline at all in wet market sales. So it's gone from 2012 to 17 down 3%, but nothing like we do. And when we look at profitability and we talk to our customers about profitability, the profitability actually is sitting in the non-branded space. Even though the revenue line is high and it's exciting, the actual margin is sitting where we're not branding it. So we've got to step back, I think, and look at it and say, are we doing brand Australia right? Are individual companies doing it? Do we have the right relationships? Is there parts of the market that have matured that much that we actually need to move into another part of the market? Maybe we've got to let some market share go if we're not getting the market share and value and some of that branded product. Most of us in Australia would look at the left-hand side and say, I'd much rather buy my beef there, but a lot of our customers look on the right-hand side. And we've sort of seen this growth of farmers markets too in cities in Australia. I'm fortunate enough to live in Brisbane, and the growth of all the Sunday and Saturday markets, people going buying their groceries, is pretty surprising. The other thing that Indonesia gives us is a great innovation culture. So the guys were having a bit of trouble with some of the ways that we were sharing information. So two of the guys just sat down and in 48 hours smashed out an app that we've all got on our phones, and everything's traceable, and we could cut the data and set it up in a cloud so you could log on to the day. They interfaced it into WhatsApp. I get daily sales reports, margin reporting, and the innovations from these guys is so cool. I mean, just get on and do stuff. So for us as a company, that's been a great experience to have our Indonesian partners. So we have more employees, more team members in Indonesia than we do in Australia, and the innovation and culture there is pretty cool around that. There's sometimes though that things go a bit funny. So we were having trouble pushing the silage up. Greg was talking to the local blokes and said, we had more corn than we needed. We needed to pack the silage. Did anyone know where there's some heavy tractors to push and pack the silage down? And 2 elephants turned up the next day. So, they were 8 more silage than they pushed up, I think. But it was pretty funny, the 2 elephants walking through the feedlot. So, I've got 2 of my bankers in the room here, so we've got to be a little bit careful. But often get asked about currency and accounting in Indonesia. We run a clean company in Indonesia. We find it pretty straightforward to do business up there. But cash was a big part of the business. One of the changes that we've really made now is that we don't sell cattle for cash. We sell electronically. So cattle truck comes in, weigh the truck, weigh the cattle. Cattle truck pulls into the shade for 20 minutes, and we get a remittance advice that'll come through that the money's hit our account, and the truck will leave. They used to turn up with cash, and so we would have 3 or 4 million US equivalent of rupiah. I don't know if anyone's looked at rupiah before, but like a pallet of rupiah is actually not a lot of money. And so we were collecting in cash, but David just stick his fingers in his ears. But when so at Lebaran, which is the end of Ramadan each year, the banking system shuts down for about a week in Indonesia, and that includes the electronic banking system. That's our biggest sales period. So we get all of those sales in cash, and we've got to manage a lot of cash for about a week, and then get that into safety deposit and with security companies and things. So we don't hold it all at the feedlot, obviously, but there is still some parts of the economy that do trade in cash, and that's been one of the challenges as they're trying to bring taxation and things into Indonesia. Most of our customers didn't pay tax, not because they're doing anything wrong, but the government wasn't collecting, or small businesses weren't paying tax, and they've now pushed GST and tax reporting down to smaller businesses, and that's caused a few challenges. The other thing in Indonesia is they have a real can-do attitude. There's Dicky, our joint venture partner there, and Dicky, fronting up and saying to the guys, righto, we've got to bag all the manure up. One of our customers wants it in 40 kilo bags. And all of them jumped in and said, righto, we'll do it, apart from the guy in the blue tracksuit pants who's got a look on him like an Australian. It sort of said, what the hell, I'm not doing that. Don't we have machines for this? The excitement in the guys in Indonesia is really cool. The other thing that Livestock does, but our business in Indonesia does, is there's 12,000 families rely on our business in Indonesia, and that's something that we don't take lightly. We absolutely value our role in the community. If we don't import cattle, or we import more or less, or we change our supply, we've really got to think about the community. And about 10% of the world's population actually relies on livestock as part of their employment and income, and I think that's one of the things that we probably don't leverage off enough when we're talking about the beef industry and the red meat industry. Is there's, as an industry globally, we employ or feed and employ or capitalise about 10% of the world's population. There wouldn't be too many industries that actually have that much impact on society, and I think we've got to remember that when 75% of people in Asia have part of their livelihood is driven from livestock production. It's a huge stat. So jumping around a bit into Australian farmland, and this sort of came into why Terra Firma invested. What are the opportunities? Is Australian farmland is still comparably pretty cheap. It's hard to get absolutely updated data. Australian farmland has gone up quite a bit in the last few years, but when we look at where we sit in the world, there's been similar lifts, but Australian farmland is pretty cheap, and we continue to see people showing interest in Australian farmland. People often say to me, why invest in Northern Australia? What are the opportunities in Northern Australia? So we ran the data for 20 years. It's not this is a sort of set and forget strategy, I suppose. There'd be a lot of people who say my share market strategy is not set and forget, but a lot of patient investors are. So if you're a patient shareholder investor in the ASX or S&P or the northern beef industry, the northern beef industry, with a capital and cash growth, has been pretty good over the last 20 years. And continues to improve. The interesting thing for me is that 4.2% is actually off a pretty low productivity base. Northern Australia is pretty unproductive for cattle. Our branding rates are too low. Our cattle survivability rates aren't high enough. The time it takes us to get an animal through to being ready for processing is too slow. That's a broad industry. There's individuals doing a lot, and I'll cover a few things that we've been doing. But so for me, the exciting bit is that 4.2% should be able to go up just through implementing science and technology that we already have, as well as some of the new opportunities that are there. So what have we been doing about it? So this is, maybe we caused the drought by planting sorghum in Northern Territory last year, and it's just calmer. But this is we got in and we've started doing some farming in Northern Australia. This is on the Barkly Tablelands. Just we planting straight into cattle land. We learned a lot from it. We had a lot of costings and pricing. Didn't go so well because of the cost, the rainfall. And then on the other side is a mango farm that's in the middle of one of our properties near Katherine. And we've been putting through development applications, getting permits for non-pastoral and for pastoral use and clearing. So most of this land in front of you as livestock land is trading for about $90 to $110 a hectare at the moment as livestock land. So you think about that in terms of where does it sit in Australia or globally. It's pretty cheap. As farming land, it's pushing. There's been some recent transactions at $30,000 a hectare developed in Katherine from that was livestock land 5-10 years ago that was worth $100 a hectare. Now the development cost is thousands of dollars a hectare, but it's not $10,000 a hectare. Those people who have got commitment and passion and time on their side are really making some good returns, particularly on the capital growth side of things, but also on a productivity basis. So, I think there's a lot of opportunities in Northern Australia. And there's some examples, some properties. The other thing that we've been doing is water development, and the property on the left-hand side is one of our places in the Northern Territory. And over the last few years, we've put in a lot of extra watering points there, 3-kilometre grazing circles. The cattle will walk out about 3.5 kilometres. They'll go a little bit further, but then their energy loss is much higher than the grass they're going out to come back to water. The blue patches are a water development we did last year. It's been costing us about $500 an animal equivalent to develop that land, and it's been averaging about $1,500 in value uplift. So even though you hold the title for undeveloped land in Northern Australia, it actually has no value in terms of how the valuers look at it, in terms of how your accounts are put together. But once it's developed, it's been going up to about $1,500. So from a private equity looking to put capital in and turn it into saleable value, it's a quick bang for buck. But in terms of sweating the asset, increasing productivity, utilising the team better, and having more ability to rotate livestock is certainly where the value is. In our company, we've still got about 700,000 hectares of undeveloped land, so huge amount of land undeveloped. And as the fund was closed in 2009, they bought CPC, added on a couple of properties, in about 2011. No more money was available. No, 2010, no more money was available in the fund. So we've had to develop land with cash that we've made. Some of the things we're doing around technology to increase productivity is trying to work out why cattle aren't productive. So we've actually putting in a GPS tracker around the cow's neck. We've also got a GPS plug inside the breeding cows. When that cow goes to have a calf or has an abortion or loses or goes to give birth, actually sets off a GPS plug, and someone goes out in a helicopter or a motorbike and finds that calf and either writes down a heap of notes, or if the calf's died, autopsies and find out why. And we're finding that we've got more vitamin A deficiency than we thought we had. There's been some Vibrio vaccine failure. Dogs have a bigger impact. Lots of little things that are all sort of common sense and manageable, but by measuring we're finding a lot out. We've got the collars on about 200 cows at the moment that we can actually move the cattle around out of the US, and we're actually going to start moving cattle by their collar properly in a couple of weeks' time and see whether we can break these things and without breaking the cattle. The other thing that genetics has really had a big impact for us, and we've so down the bottom are Wagyu Brahman cross cows with an Angus crossed Brahman calf back over them, and the hybrid vigour in those crossbred cattle is just unbelievable. We're talking 20-25% increase in branding rates in sort of one crossover generation, which is pretty exciting. So foreign investment into Australia gets a lot of attention. We've arguably been the largest owner of land, foreign owner of land by size and value, and we've had a reasonable share of criticism. Not too much though. The government's been quite good to us, and most people said, "Oh, but you're good foreign investment. You're from England." If you go sort of funds of funds, we're not all from England. But the thing that we are is a foreign-owned Australian company. So Australian management, majority Australian board. We hold all our meetings in Australia. We try and be an Australian citizen, and that's important to the shareholders. But it's worked well for the business. That foreign-owned businesses aren't really operated from offshore that successfully. But with all of that noise and criticism, there's only about 0.2% of foreign investment that comes into Australia and goes into agriculture. Most of it goes into mining and financial services and a whole range of things. But agriculture certainly cops its fair share of, more than its fair share of criticism for such a small amount of the foreign capital that actually comes into Australia. Yet, beef is the 6th largest export industry in Australia. So it's one of the biggest, and the way that we've traditionally developed Northern Australia and Southern Australian agriculture is through debt. And I know that there's a couple of bankers in here that would like us to put more on the credit card. It's just too slow to keep investing in agriculture for the infrastructure we need, and the opportunities are there by continually using debt finance. Equity, I think, has a lot more. And so, why aren't people investing in agriculture, both domestically and foreign? And there's probably a few of us here got called in front of the Joint Select Committee in Canberra to try and work this out. Fund managers, lack of understanding about agriculture, the absence of sector performance data, and when they can find performance data, it's usually a Google search of someone who's gone broke or blown up, or a listed company that hasn't had the best success rate. And then foreign investment rules, spooking new capital coming in, but it's also spooking domestic capital that is saying, I might want to sell this business one day, and if I go to sell it, I want competition from foreign capital. So there's plenty of domestic capital talks about that they are worried about the policy of restricted foreign capital coming to Australia because it will limit their ability to sell in the future. Now, it's not entirely true in practice of what happens, but it is a legitimate concern that we should all be involved in if we want value to stay up there. So, the industry is challenged sometimes, particularly the beef industry, about its emissions, what it's doing and what it's doing about that. So, Australian agriculture is certainly a big emitter. Livestock are a big part of that. 12.9% of Australians' emissions come from agriculture, 33% comes from electricity. But the red meat industry is one of only two industries that's actually getting on and reducing its emissions. There's a target of 2030 to be emissions free. I don't know whether we'll get there, but certainly giving it a red hot crack with genetics and increased ways of managing the environment. Environmental stewardship is a big challenge. Over 50% of Australia is actually managed by livestock producers. So we have a huge role as livestock producers in caring for the environment in Australia, caring for the Australian land base. If you look at livestock production and national parks, it's a huge part of Australia that we care for. And animal welfare is certainly important as part of our community engagement. And what do we do? So at CPC, all our cattle that have still got horns are given pain relief for dehorning. Any cattle that we castrate, we apply pain relief to. That's certainly increased productivity. It's a good return on investment for us. We don't castrate a lot of our northern male cattle. We leave them entire, and they go to the feedlot entire because the Southeast Asian markets prefer leaner meat and don't discount entire male cattle like the southern markets do. So we've stopped castrating a couple of years ago, and that's increased survival rates by a couple of percent in male cattle as well. So there's an added benefit. So the challenges around activism, whether it's corporate activism, the Bank of Adelaide saying that they won't bank live export anymore, or people gluing themselves to the streets. The beef industry employs nearly 440,000 people, and there's 82,500 businesses. Yet a very small part of the community can make a lot of noise and get a lot of attention. It's been interesting to watch now that we're starting to see a bit of pushback from the general community saying, "Hey, this is silly. What about the balance? What do I if you're going to disrupt my travel into work, if I'm not going to be able to get my tram through the intersection in Melbourne, the vegan movement and when I say vegan movement, I don't mean all vegans are bad, I don't mean all vegetarians are bad by any means, but that sort of extreme movement is starting to do some damage to themselves. That said, though, that our agriculture industry's really got to step up, do the right thing. We've absolutely got to do the right thing. If we do the wrong thing, we've got to do something about it. We've got to blow the whistle on ourselves, put a hand up and say we had a stuff up, this is what I'm going to do about it. And then when we are doing good stuff, we've got to promote that, but at the same time not be afraid to talk about things that aren't great. At our company, we have a higher mortality rate on an annual basis in the paddock than we do on livestock ships. So what are we going to do about that? We've got to improve our mortality rate in the paddock. We've got to continue to look at how can we reduce livestock mortality on ships, but in the paddock we've got to get our mortality rates down. We're doing that with better segregation, more phosphorus, early weaning calves, smaller paddocks, all those sorts of things. But that for us, we put our hand up and say that's something we've got to get better at. So, the McVegan. Who do you think launched the McVegan? Anyone know this? A few people probably heard me say this. So Terra Firma, that own CPC, launched the McVegan because they own a big whack of McDonald's stores. And most people would say that is absolutely crazy. Why would they want to undermine the red meat industry, and why would they want to launch the McVegan? Because 1 in 5 people in Europe have a meat-free day. 1 in 5 people going out to dinner don't eat meat. Whether they can't eat meat, don't want to eat meat, don't like it, it doesn't really matter. Since they've launched the McVegan, which they call I think the McSpicy or something, in all the Nordic McDonald's, their beef sales have gone up because people who are in a group of 4 or 5 people that have got a child or a friend or a relative who doesn't like beef, doesn't like chicken, can't eat it, ethically opposed, whatever, doesn't matter, are coming back into the McDonald's stores. So they actually increase their beef sales by having a vegetarian opportunity and option. It's also got people trying it and going, it's not too bad, but geez, I like the old stuff better. And it's helped cement some people back into, geez, red meat's great. So the other thing that we're really seeing with a lot of the alternative food startups is they're a very small percentage of a massive industry. You're talking one of the biggest industries in the world is food. You take a small percentage of it, it's pretty valuable. But we're trying to work out which companies are good at raising money, and which companies are good at making products that people want to eat. And I think we're going to see a bit of a challenge coming for some of those companies that are excellent at raising money but actually not producing a product that people want to eat. So the sale of CPC, I'm nearly finished. So we, private equity owned, as I said, they have to sell all the businesses in the fund. They'd like to keep CPC, but they can't. So we embarked on a sale process last year. We had to put ads in the paper as part of the interpretation of the foreign investment marketing. So we had to put quite a few ads in the paper, and we thought the sale process would take about 2 years. We're a bit over a year now on the formal sale process. It's been a challenging time with droughts, floods, fires, elections, market movements, all sorts of things going on in the world, trade disputes with some of our biggest trading partners, potential trading disputes, supply and demand, and that's all been good. That's all every day. But we've sold. The business was at the end of financial year's end of March. So at the end of 2018, the business was worth just under $1 billion. We've sold off a bit over $300 million of the business. So it's about $700 million left, and we're working with quite a few bidders for either the whole of the company or parts of the company in individual stations. At the moment, shareholders aren't in a rush. They'd rather get the right value, but they do value time. The challenge for us is we've had to continue running a business at the same time as running a sale, and that's been good. Where our team is excellent. We've got a really motivated team. So some of our team outside, we have an annual challenge and competition, and that's the horse part of it at the top, and then the bottom is our Brisbane head office. So I don't know if you pick up from there that CPC's as a company, we're about 50% female at CPC. One of the things we've done is made no barriers for any job, and the best person gets a job, which means about 50% of our team are female. They've been great through the sale. One of the things that we've really worked hard to do with the team is be really transparent about the sale. This is what it's going to look like building up to it. This is what worst case will be like. This is what best case could be like, and really transparent with our team. So we haven't lost anyone out of the company yet who due to the sale, and we've actually had a new person join our executive team last week because we needed a bit more skills in a different safety area that we were dealing with, and there was plenty of people happy to join us. So I think there's some bright opportunities for agriculture, and it's pretty exciting. So I think there's certainly more opportunities than challenges. You'll note that Australia's not on here. One, because I download it from some North American website, but two, it's more because of the customer demand, I suppose, is so much more outside of Australia for our product, but also the investment capital for agriculture. I'm not saying we need to sell the farm, certainly not saying that the family farm is going away. I think it's going to continue to grow, but there's so many opportunities for Australian agriculture, but the demand and the capital and much of the opportunity for us is offshore in terms of how we think about our product and how we think about investing in our industry. So that'll be good.